Okay, Matthew, welcome back to the news roundup. As always, Matt Kimmell and myself on the stream. Colin is on pat leave. Charlie's not here. It's just you and I like old times. Welcome back to the show.
Thanks for having me. I feel like I'm in a time machine, like 2-3 years back.
I do miss those. Sometimes I go back and look at those thumbnails that you and I both got just wrecked on week in and week out. It's never looking good. It's amazing we found love, to be honest.
I'm glad you hired a new thumbnail artist. I'll put it that way.
The new thumbnail artist is me. Hey, this is Will with Blockspace. Did you know that we're selling BitAxe Bitcoin miners now on miningpod.shop? If you're interested in having a BitAxe sit on your desk, or maybe you want to orange pill a friend or a family member, go to miningpod.shop to get industry-leading pricing on BitAxe units. If you want to buy them for your company, maybe as a holiday party gift or something else, feel free to reach out to us at hello@blockspace.media to order custom bulk amount for a discount. Again, that's miningpod.shop to order a BitAxe today.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Welcome to the news roundup. We typically don't do this live. Maybe we'll do it live going forward. You can find it on Apple, Spotify, any podcast platform. We also host on CoinDesk and YouTube. So if you're catching this now on Twitter, feel free to go and bookmark it or check back later, and you'll find it tomorrow on one of those platforms. Today, we're going to be going through Bitcoin mining news from this week. We're going to start with a difficulty roundup, looking at hash price from our friends over at Luxor Tech. And then we're going to move over to the EPA announcing their plans to slash new or old regulations around energy production. Move over to Canaan, talk about their $20 million in preferred financing that's lined up. Huge announcement, in my opinion. CoreWeave and OpenAI signing a deal ahead of CoreWeave's IPO. And then in our Cry Corner, Matt, we have NYDIG's parent firm, I should say, Stone Ridge, is accusing Mawson of stealing $30 million worth of Bitcoin mining equipment, which is it's a lot of miners to have stolen. So we'll go through this, that, and the other thing. But let's start off with some thoughts on hash price. Let me pull up this infographic from our friends over at Hash Rate Index. Mr. Difficulty Weatherman, what do we have in store?
Yeah, so we have quite a bit of ways to the next difficulty adjustment. We just had one a couple days ago, but as of right now, we're estimated for a pretty major difficulty increase. If you're watching in a video stream, Luxor has it at 3.73% increase. Pretty concerning for miners out there, given the hash price. That is what you're being paid per each hash per day, measured in dollar per petahash second per day. Kind of a measure of gross revenue on the network if you're unfamiliar with mining economics. But we're at about $45, which is basically pre-election levels, really, is where we're at currently. And so the idea that, at a time where the Bitcoin price is down from the high at, the mid 105, 105, 108 level, we're down maybe 30% from there. And people are kind of concerned with the macro environment. The fact that we are at 45 for a hash price with a looming difficulty increase, I think, people aren't getting warm and happy feelings out there in the mining market. But, we still have quite a bit of the epoch to go. The adjustment isn't until March 22nd. So blocks are coming in pretty quick right now, but that could really reverse and maybe things will look a little bit better. Maybe we get some, exciting news in the Bitcoin space that props up price, or maybe there's some,
David Bailey says there's news coming.
Okay, right. Well, as basically every week for a while, I feel like we've been getting those tweets. So I'm I guess I'll be cautiously optimistic. Yeah, and the last thing I was going to say is maybe some app will launch and we'll get a huge fee spike, which will help the miners. But anything I'm missing there, Will? What do you think about where hash price is?
No, I mean, on the David Bailey point, the man has delivered time and time again. So I'm pretty excited myself. Looking over hash rate index and the data just started a new period. Last adjustment is 1.43%. For Bitcoin miners, we're looking at all-time low in hash price. So, we'll scroll down here. We'll see that the last 3 months has been pretty brutal. And we clicked our lowest at $42 per petahash, just right over here. It's hard to kind of get on the graph, but very, very low, right? So what does this mean? I mean, it's just revenue for Bitcoin miners, and it's very, very difficult to be a Bitcoin miner right now. So that's not great. There's still more hash rate being deployed. So obviously public miners who have a lot of capital and they have an incentive to plug in more Bitcoin miners, and the private guys out there are obviously trying to scurry and deploy a hash rate as well, but they don't have as much of an advantage. So there's an interesting dichotomy in that part of the market. The other thing I'll bring up is that ASIC prices continue to be very low and bad. Looking at this ASIC price index, it's just not that interesting because it's just been bad for a while if you look at the historic norms. So these track Bitcoin price. The cost of purchasing an ASIC basically tracks how much revenue you're going to get out of it. And when revenue is at all-time lows, just continue to expect to see that these ASIC prices continue to be very, very low. So the mining economics are not fantastic, but that won't stop us from enjoying our podcast today and talking about some other topics, including this EPA news. So I'm going to move over here, Matt, and share this tab. This came out this morning. EPA launches biggest deregulatory action in U.S. history. They essentially are going to be walking back a bunch of different regulations that were put in place by the Biden-Harris administration, and then even going back to the Obama administration. Let's go over to this video and take a quick watch.
Today, I'm pleased to make the largest deregulatory announcement in U.S. history. The Environmental Protection Agency is initiating 31 historic actions to fulfill President Trump's promise to unleash American energy, revitalize our auto industry, restore the rule of law, and give power back to the states. EPA will be reconsidering many suffocating rules that restrict nearly every sector of our economy and cost Americans trillions of dollars. Our actions include the Biden administration's deeply flawed Clean Power Plan 2.0, mercury and air toxic standards, Quad O BC, particulate matter 2.5, light, medium, and heavy car and truck rules, NESHAPs, and the so-called social cost of carbon. To advance cooperative federalism, EPA will partner with states that were universally rejected by the last administration's Good Neighbor rule. Among many other actions, today's momentous day also includes the 2009 endangerment finding, along with all actions that rely on it. I've been told the endangerment finding is considered the holy grail of the climate change religion. For me, the U.S. Constitution and the laws of this nation will be strictly interpreted and followed. No exceptions. Today, the Green New Scam ends as the EPA does its part to usher in the golden age of American success.
Okay, I think we got the gist of it there. It was about 2 minutes long, but the news here, of course, for Bitcoin miners is, hey, maybe we have a more deregulated energy market, and that is bullish long-term for Bitcoin miners. We had a piece earlier this week in our newsletter talking about the natural gas markets in 2022, which a lot of Bitcoin miners on unfortunately became very familiar with. A big name out of that cycle was Argo blockchain, and their largest site, Helios, became basically a deadweight asset because of natural gas prices over the course of a few months. And so they had to sell that at a significant discount to Galaxy Digital. And so that's kind of the story from 2022 with natural gas prices. And I think a lot of Bitcoin miners who survived that era now have it very ingrained in their mind, get cheap long-term contracts that have very little variability in them. And the fact that the Trump administration is moving forward with an energy first policy is certainly bullish for Bitcoin mining in the United States. I think that's why you see continued investment in the United States, even when there's so much hash rate here. I don't have like a lot of thoughts on like the politics of the EPA or anything like that. I'm just here to talk about like the energy policies that could help Bitcoin miners. Wanted to get your thoughts on this announcement.
Yeah, I think it's time for you to bring back out that pre-Obama era I love fossil fuels t-shirt that you've been hiding in your closet.
Hey, I mean, like natural gas fuels so much of an ordinary life, and I think that for Bitcoin miners, they're going to be happy if there's more deregulated markets.
Yeah, I just had to sneak that one in there. Yeah, of course, one of the biggest inputs, right, to the profitability of a Bitcoin mining company that's actually prop mining, right, is the electricity cost. And so this is, potentially major for the sector. I think as you noted previously, right, back when there was issues with Nord Stream and there was kind of, the Russia conflict was really just starting and nat gas prices went up, it kind of cascaded throughout the industry. You mentioned Argo. I recall at the time too, Cathedra also kind of getting hit by sort of increased energy costs with dependence on natural gas. And so, yeah, it led to a wave of, well, let's lock in fixed rate, PPAs long term, try to get cheap contracts. And so, it's something that is super significant to mining companies. It seems like, this is just another lever that the White House administration is pulling that they kind of planned on, right? You heard it throughout the campaign. We're going to do tariffs. We're going to deregulate the energy sector. And we're going to do the Doge job cuts, right? Certain levers of there are deflationary. This one is certainly a part of the America First. We're going to reshore manufacturing. We're going to reshore energy stateside. And it's all happening very fast. It's definitely going to be interesting to see how this actually cascades through the market. But it's definitely, to me, seems very bullish for fossil fuels, the way that I encourage people to actually go to the announcement and read specific line items, right? The video there, he's kind of, talking broadly about America's success and, cites a couple different things, but there's actually a lot to this deregulation announcement.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, a country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
Okay, let's move over to this Canaan story, which I think was under talked about this week. Amidst turmoil in the Bitcoin markets, Canaan has secured $200 million for U.S. Bitcoin mining expansion. According to our friends over at the Miner Mag, Canaan mined 82 BTC in February with a realized hash rate of 5.13 exahash. So if you are watching this or you are listening to it, I'll just kind of talk along with the article really quick. Bitcoin mining hardware manufacturer Canaan has secured up to $200 million in funding through a Series A1 preferred shares financing. The company announced this on Monday. They received an initial $100 million from the first tranche, with expected $100 million to come in the near term, depending on certain conditions. This is going to be used for research and development, production expansion, and digital mining infrastructure investments in North America. And they have a long-term prop goal of 10 exahash of Bitcoin mining in North America by mid-2025. This follows other financing that they've done. So they've secured 2 loans totaling $22.3 million. It was collateralized by Bitcoin. And then a further stock offering that raised $50 million in the end of 2023. So they've raised quite a bit of money. And there's actually one other securities purchase agreement, which raised $30 million as well. So they've raised quite a bit of money. Now, for those who aren't super familiar with Canaan, they're one of the other big 3 manufacturers of Bitcoin mining ASICs. You have Bitmain, MicroBT, and Canaan. Canaan's sort of been the small guy for a little bit now. I mean, like earlier in their history, they're much larger, but Bitmain obviously rose to prominence, and there was kind of just a time period where it was just Bitmain and MicroBT. Canaan's really been focusing on its prop mining, for itself. That's been sort of like a prominent play for a little bit. And then recently, they've actually become sort of noticed again in Bitcoin circles for this little Bitcoin mining heating product that they put out, and it's in like huge demand. A lot of these products are like somewhat gimmicky, and people don't love them. Like there's the infamous Anthony Pompliano one that he shilled for a few years back in like 2019, 2020. But this one actually did really well. It looks pretty cool. We've done some stuff on the show talking about it. To me, like them being able to raise this amount of money in the market right now is notable. I reached out to Canaan to get some more information around like what this entails, who was the institutional investor in this. Haven't heard anything back. I would love to know more about the terms of the deal. Obviously, there's an equity stake. It's hard to know who's like in the capital stack after a while for some of these companies, especially when they're have been doing so many deals. I guess they are public, so we could really dig through their filings if we want to do some journalism. Matt, any thoughts on this one?
Well, you are a journalist. This is
I know,
are running a media company.
But we're lazy sometimes. We just podcast instead.
Yeah, so the things that you really went through all the terms of this. There's nothing that interesting that I could add to the discussion. It's kind of just a news item to keep abreast of what's going on in the industry. But yeah, Canaan's been a long time ASIC manufacturer, most known for their, I think, A series, right? 11s. There's probably a lot of 12s still out there, 12 series that is hashing. But what's significant about this, right, is they are strategically pushing more for actual prop mining and a movement to North America. So, as you said, they have been the smaller fish in the kind of 3-way oligarchy of Bitmain, MicroBT, and Canaan for a long time. But maybe the good thing about prop mining as a manufacturer, right, is you could basically get discounted ASICs relative to the rest of the market, as there's just kind of this ongoing, right, ASIC hamster wheel that's been discussed over and over again within the industry. So there is a potential for kind of a competitive advantage there, and maybe the foray into North America too has something to do with the tariffs going on, and maybe they want to try to become partners with more of the public listed miners and kind of like the really big spenders in the ASIC market. So I guess it's a story to watch, but this is simply an equity deal. It's not that exciting in and of itself.
Dang, way to put some water on my excitement here. 100 million is a lot of money. I think that one thing
what they've raised in the last 2 years.
It is quite a bit of money during a down market where things are not as interesting to invest in. The one thing I'll note is the Bitdeer trade was really exciting to people in the fall. Bitdeer is obviously making their own ASIC as well, the Seal miner. And I think a lot of people saw like this whole execution pathway, right? Where it's like Bitdeer is a self miner. They have a huge power pipeline of like over 2 gigawatts, and they can make their own ASIC and collapse the cost of mining Bitcoin by having the entirety of the mining equation in-house. Like the economies of scale just become so better. Canaan already has that. And so like I think that there's been an underreported, underappreciated part of the story there that like they can do what Bitdeer is trying to do actively. And so there's there. Now, of course, there's so many other things to think about when you're making an investment case. I'm certainly not making one for Canaan. Tons of other things to think about. Who's already holding? Are executives going to sell? Who are the partners? What are their future plans? Things like that. But it does seem like Canaan is really focused on, one, gathering capital, and two, deploying into self-mining hash rate. And there's a really bullish argument for doing that if you can execute. You're competing against peers who have to go and work with Bitmain, or have to go work with Block and their new proto miner, or have to go work with Aradyne. And that means that you just already have another marginal cost on top of your mining op. So something to think about. Unless you have any other thoughts, I'm going to bounce this CoreWeave story over to you.
Run it. If you are excited, Will, about $100 million, then you're going to be ecstatic about the billions of dollars in this next story.
So excited.
The headline reads up on the screen here: CoreWeave inks $11.9 billion contract with OpenAI ahead of its IPO. You know, you could probably do a whole podcast on just this deal in and of itself. There are a lot of different components to it. But just, I guess, a small background on CoreWeave. They are a darling right now in the AI space and looked at as one of the, if not the most prominent IPO of 2025 in the States. They're one of them for sure, right? And so they're an artificial intelligence startup backed by NVIDIA. They have now signed this 5-year contract with OpenAI, who, of course, has a lot of buzz about it in and of itself. We talked about CoreWeave last week as well, because there was rumors about Microsoft kind of cutting some of the deals with CoreWeave, which, you know, was potentially significant, especially ahead of the IPO. You know, you don't want bad press coming out before you launch onto public markets, but, you know, this is that seems like a drop in the bucket compared to this, you know, huge splash of a deal. I guess I'll just give, you know, context about why this is, you know, this AI story is relevant in mining circles anyway. And it's because the relationship CoreWeave has with Core Scientific. Core Scientific, of course, was the largest Bitcoin miner of the last cycle, as far as a Bitcoin production and just sheer size of hash rate perspective. Of course, they had some financial troubles through the bear market, went through bankruptcy proceedings, came out the back of it successfully, but pivoted strongly. And, you know, you can add context into this, but I believe really the first one to embrace fully we're going to go high performance computing AI route. As part of that, got into this partnership with CoreWeave. They had previously done business together. I mean, back in the Ethereum GPU mining days. CoreWeave inking lots and lots of deals as far as, you know, data center infrastructural demand for GPUs in the AI sector. Core Scientific had lots of energy contracts, lots of data centers underway, and it was kind of this marriage that has culminated since then. And that brings us all to this story, which is CoreWeave continues to ink big deals. And, you know, if it's a sustainable partnership, perhaps Core Scientific benefits from that in the long term.
I think like the further relevance for this is, you know, you mentioned CoreWeave was an Ethereum miner at first. And I think they give credence to the case that you can be an infrastructure provider of some sort and then pivot. And for Bitcoin miners, that presents another out. You know, when you come to a business model, first thing obviously is make cash, make revenue. But you don't want to be doing that forever. Like, you want an out at some point. And for Bitcoin miners, sometimes it gets a little freaky. It's like, what's the out here? I have this infrastructure, and if the energy costs go up, or there's a problem with me securing ASICs, or there's a problem with my site, Bitcoin keeps going down. What are you supposed to do with that infrastructure? And for the longest time, we've always just said in Bitcoin mining circles that Bitcoin miners are the longest Bitcoin out of anyone, because they have all this infrastructure in the ground that's only good for one use case, mining Bitcoin. And then this AI HPC model comes along, and it sort of gave everyone an out, depending upon, of course, your project. Now, there's some Bitcoin mines in the middle of nowhere that aren't really that good and like not going to be useful for anything else. But I'd say for like the large guys that, you know, for the most part have just been super long Bitcoin, the Riots, the Cores, and everyone else, this does present an out. So it is interesting in that case. Now, the case that kind of pushes against that, of course, is like you need the expertise. You need the people in-house who have had the ability to do this. Core Scientific has had that historically, and that's why they've been able to execute so quickly on these deals and get these deals signed up with people like CoreWeave, who can then work with the Microsofts and the other hyperscalers. I'm dubious about a lot of the other hyperscaler conversations. I always hear that there's going to be new hyperscaler announcements between Bitcoin miners and groups like Amazon, groups like Microsoft. But my understanding is why would Amazon go and work with a small cap Bitcoin miner that doesn't have the team in place to be able to execute? Yeah, you might have some cool people on your board. Yeah, you might have some good executives who have a history of this, but typically Bitcoin miners don't quite have the expertise to be able to pull this off. So I've been a little cautious around it. I think the last thing to note is I believe this CoreWeave was in Castle Island Ventures portfolio, and they're up big on this, you know. So congrats to Castle Island for securing that bag. Let's go to our last story. NYDIG.
One last thing about the other one.
Yeah.
Just because there's a staggering number or two in this article that I think is worthy sharing. In its IPO filing in early March, you know, like 2 weeks ago, CoreWeave reported revenue of $1.92 billion in 2024. Nuts. In 2023, it had $230 million.
Yep.
There's like a 9 times difference. And they've raised more than $14.5 billion in debt and equity across 12 financing rounds. I mean, the money that is being poured into AI is just on another level.
What were you doing in 2017?
Just to put it in perspective, the highest market cap miner, right, is, you know, as far as the market goes, is Marathon, and their market cap is just over $4 billion. So anyway, the numbers here, it is on another scale as far as the AI space goes.
No, I'm glad you brought up those numbers, because that's kind of what I'm pointing out is like, why would a Microsoft or someone work with a small cap Bitcoin miner? The only thing that really makes sense to me is like the energy contract is so good. And that's where like you get this Rockdale Corsicana conversation with Riot right now, where they do have really good energy contracts. And that might just be like the play. And Riot's also an engineering company. And they kind of have dog food their own engineering stack. So there's some that make sense, but a lot of it I just like don't trust.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
But let's move on to this cry corner. NYDIG's parent firm, Stoneridge, accuses Mawson of $30 million Bitcoin miner theft. This is again from our friends over at the Miner Mag. You can go read the story there. NYDIG acquired Consensus in November 2024. It's actually a scoop from Blockspace, the parent company of MiningPod. Going down to the story itself, NYDIG's parent company, Stoneridge, and its recently acquired Bitcoin mining subsidiary, Consensus Colocation, have filed a lawsuit against their hosting partner, Mawson Infrastructure. The lawsuit filed this week in the state of Delaware accuses Mawson of unlawfully taking possession of more than 20,000 ASIC miners owned by NYDIG and operated by Consensus at Mawson's Midland facility in Pennsylvania. The plaintiffs claimed that Mawson has been mining Bitcoin for itself under the allegedly stolen miners valued at $30 million since February 28th, generating daily profits of between 100,000 and 200,000. This is messy. This is a messy, messy story. And on top of it, this week, there were some filings that came out about how the Mawson CEO has been paying himself millions of dollars. Meanwhile, the company has sort of been falling apart. It's not looking good for Mawson bag holders at the very least. Stone Ridge is huge. It is a behemoth of a company, and I would not want to be on the wrong side of it. NYDIG, for its mining ops, has been kind of quietly gobbling up other operations. The Consensus one was probably the most notable. I think they had close to 5 exahash as of November when we reported on that, and they brought it in-house. We don't know this. This is speculation, so take it with a grain of salt. But why would NYDIG be sort of gobbling up private miners? Maybe to go public with a new mining company of some sort would be my end case. But of course, that's me speculating. That's not for sure. I think this story just, again, points to the difficulties of operating joint ventures in Bitcoin mining. Joint ventures are very common. Most people start with a joint venture where there's capital on one side and execution on the other. And just like the Swan Tether beef we've been covering on the mining pod for a while, this one looks very similar. The only difference here is, of course, that seems to be 30,000 miners that NYDIG doesn't have access to and they claim that they own. So, messy story. Any thoughts on your side?
Yeah, I like to think of a cartoonish visual of Mawson scurrying away with this huge load of 20,000 ASICs. But yeah, that's not the reality of the story. The reality of the story is a co-location deal that was sunsetting and, not abiding by the rules of that co-location deal is basically what NYDIG and Stone Ridge are alleging here. I don't know. The first thing that came into my mind here is that this has to, historically, I guess I was thinking timeline wise, I bet a lot of these machines came from those ASIC-backed NYDIG deals back in the previous cycle. But then as companies were struggling, not able to repay, they collected that collateral. But instead of liquidating them, they took possession of a lot of those ASICs. Some co-location deals probably came out of that. Maybe this one. That's just a speculation. But I guess there's trouble in paradise in the mining industry. I feel like
it's not paradise right now, though.
It's not paradise. That's right.
It's actually pretty awful. Like
pretty bad. Okay,
there's been so much fighting in the mining mafia community right now. There's just so many spats on Twitter. It's kind of glorious in its own way.
I don't know what to think of this. It seems like there's often a kind of legal dispute battle in the industry over deals like this. And so this is kind of just another one, unfortunately, and hope it gets resolved quickly.
Well, Matt, I think we can close it out there. If you enjoyed the mining pod, you'll probably enjoy some of our other content as well. Go to blockspace.media and check out our newsletter. We publish 4 times per week on everything in the Bitcoin industry, from tech developments to mining to markets. Also check out OpNext, the Bitcoin Scaling Conference. We'll be running that at the MicroStrategy headquarters outside Washington, D.C., April 11th to 12th. It's 2 days conversation on all things scaling Bitcoin, with lots of conversations from Bitcoin Core, Coinbase, many other people in the Bitcoin industry. Matt, do you have any announcements for yourself? Give you a little plug here. Anything you want to talk about?
I'll be at OpNext, so come hang out, say hi to me.
Let's go.
Yeah, you can follow me online. I'm not the most active on social media, but I like to help out at Blockspace and join the pods. I'll be on another pod in substitute for Colin on I believe is Bitcoin season 2. I'm with Charlie.
Yeah,
we're coming up. The topic like 15 minutes here. The topic is whether the Lightning Network is a disappointment or a success in 2025, which I'm excited to talk about. Got some opinions to put out there.
Awesome. We'll close out here. Again, if you missed the show, didn't watch all of it, you can just scroll back or hit us up on Apple, Spotify, wherever else you find your podcasts, at the Mining Pod, and then, of course, on CoinDesk. Thanks for watching. Talk to you all later.